Hi, this is Tony Sagami. Hey, I want to talk to you a little bit about the valuations of the Chinese market compared to the U.S. market to give you a little perspective on which place is the most dangerous and opportunistic to invest in. Now, first of all, let me tell you what the Chinese PE is. The average stock on the Shanghai Stock Exchange is selling for 33 times earnings. That probably sounds pretty expensive on the surface, but you have to take a look at both in the historical context and also compare to what the growth is over there. Of course, the growth is extremely fast in Asia. The last numbers we got for the GDP were 7.9% in the second quarter, so that's extremely strong growth and something that justifies a much higher PE. Also, put in perspective, historically, Chinese stocks did go for 52 times earnings back when they peaked in October of 2007. So they're substantially cheaper than they were back then, and the growth rate is still extremely strong. Now let's compare that to the U.S. The S&P 500 is selling for 17 times trailing earnings. Not cheap by any means. And more importantly, take a look at what the growth rate is in the U.S. You know, Bernanke said the recession is over. I don't believe him one bit. But whether he's right or wrong, it's still the U.S. is growing very, very slowly. And also, I want you to consider this. This is the most worrisome statistic I think there is. Since the March 9th low, the S&P 500 has averaged a daily gain of 0.31%. 0.31% a day since March 9th. Now that's an astronomically fast growth rate of growth. Let me tell you how fast that is. That's 3 times faster than the previous highest growth rate, which we saw back in 1982. And so what that tells me is the S&P 500 has come extremely far, extremely fast. And not only that, 17 times earnings is extremely expensive for a country that may or may not be in a recession. I don't believe Bernanke one bit. So my point is, even though the PEs are higher in China, it's a much more reasonably valued place and where you should consider keeping most of your money. This is Tony Sagami. Until next week. Bye.